Natural gas had a great week last week. Prices rose from the 225 to the 260-ish level. Question is, does price have legs to move higher? Fundamentally, the storage levels are still roughly 20% above the 5-year average. In addition, over the next 2 weeks, the weather is going to be on the relatively mild side. So, um, a pullback appears to be inevitable. Maybe a pullback to what was support resistance, which should now potentially serve as support at the 240-ish level. And if I do look at the chart, I see a level of interest, which is within this resistance support area on okay volume. But we do have a daily buyer's level. Daily buyers at the 235 level. Now, in previous videos, I talked about natural gas being a supply and demand equation and how Mother Nature is going to have a lot to say with regards to where prices of natural gas goes next and over the coming months. So this article is coming from Market Watch. The EIA forecasts the second highest U.S. summer power demand on record for natural gas. And we didn't even get into later this year uh, as winter hits again, not only in the U.S. but probably more importantly in the Europe, where those countries are somewhat at the mercy of Russia. But let's get into it. This article. The EIA expects natural gas demand to generate U.S. electricity this summer to reach its second highest level on record. The EIA forecasts that an average of 38 billion cubic feet per day of natural gas will be consumed to generate electricity in the U.S. during the summer of this year, which runs from May to September. That would be the second most on record behind the 39 billion cubic feet per day record last year. All right, so we're interested in the May to September months. And let's go back to the charts. So the question is, does natural gas have legs to move higher? Well, according to the daily chart, on Friday you had some profit taking, but you also had price piercing the 100-day moving average. When I look to the left, there's really no clear sellers until about the $3 level. But we are in that time period, the summer months, where natural gas is going to get used a bit more. So fundamentally, prices do have a probability of moving higher, and technically the same. There are no real buyers between $2.70 and $3. Now, I just want to go back to last year, same time frame. We had, let's just mark it off on the, this is May to September. All right, and you can see that in May prices rose and then collapsed. In June, and then rose again. This was crazy, right? A lot of volatility. This was the time frame where Russia invaded Ukraine. I don't anticipate the same type of volatility this summer, but could have a very similar price pattern where prices pull back and then rise. Now again, $2 is the line in the sand, and you have buyers that protected this level multiple times, right? It's the reason for my videos in the past that we did reach a bottom, and now you can see price breaking out above this resistance support level at 240, and in the process of the breakout, price did form a daily bias level at 235. So we'll see in the subsequent weeks, even if this level is breached, it could be just a bear trap. Now, formation's decent, price structure's decent, took out this pivot high. Just wish it had more volume on the breakout, but the volume's not bad. If you can compare it to previous days, it is above average, but not extreme. So let's see if this level can hold. Again, I would anticipate a pullback before prices resume its upward motion, targeting $3 as the next short-term level. Ultimately, the target is 350 medium term. Thanks for watching. Subscribe. Please like the video.